Good morning, everyone. I know you've already been greeted and said good morning to, but still, I always like to start off with a good morning. Thank you so much for coming out, and thank you for staying for this panel. So I'm guessing you all stayed because you want some money. That's my guess. Most people do. Well, okay, more money. Love it. Really excited today to talk about how to finance your next real estate project or construction project. I know one of the big resources for businesses, particularly those that are businesses of color, is getting access to capital, and that's something that I really care about. And I actually went through in my own business, which originally was in the food space, and then now currently in my business outside of World Business Chicago in real estate development. So I understand the struggles intimately that you might be going through getting access to the money. To give you just a brief background about myself, again, my name is LaForest Baker. I'm Vice President of Community Impact at World Business Chicago. For those that are not as familiar, World Business Chicago essentially is the economic development arm for the city of Chicago. So we help to bring businesses to the city. You might have heard about like Google coming to the Thompson Center. We're the team that helps make that happen. The community impact team in particular focuses on bringing really three things to the south and west side of the city. Number one, helping to build the space on the south and west side. I know we had an amazing talk from NOSA. He's one of our partners, particularly with the $2.2 billion Invest Southwest program, helping to build the space. Number two, we help attract large national retailers to be tenants in those spaces, because obviously one of the things that you all, I'm sure, are going to hear from these amazing panelists that we have from the banks is that you need credit-worthy tenants in your projects that'll help you finance your project. So we help to attract those tenants, particularly to developments on the south and west sides of the city. And then number three, we help build capacity for established Black and brown businesses. For us, we don't necessarily work with startups, but if you've been around a few years, you're already making some money. Like you said, you wanted more money, right? We can help you get more money. So we work with actually some partners that are on this stage with our Black and Latino Excellence Investment Summit. It's our second year running that. Before coming here, before coming to World Business Chicago, I grew and scaled my own business in the food space for over a decade. I know I look like I'm 12 years old, but I did a lot of things in my 12 years. I was very, very successful in food. One of the top-selling products in Whole Foods, top-selling products in Jewel Osco, which is Albertsons Market here, top-selling product in Mariano's nationally in my category. So I grew and scaled that business to hundreds of locations across the Midwest, 5 states, built a large team, large supply chain. And so I understand some of the unique challenges that, again, you all are going through, as not only when you're getting started, those late nights, all the sacrifice, but then also as you scale up, because then that's another level of kind of struggles as you scale up. You're not doing everything yourself. And so, really, really excited today, again, to be here and to moderate this panel. Money, to me, I firmly feel that it's kind of messed up in this country, in this city. We don't really teach people how to get money. Our education system doesn't teach people how to acquire capital to grow your business. We might teach you how to write. We might teach you how to do some math. Those things are helpful, but when you are getting ready to grow and scale a business, you need money. And so I'm really excited that we have this illustrious panel here today to tell you all what they're looking for in getting that money so that they can go from, saying no to yes. That's my goal. If the people on this stage can go from saying no to yes to you, I've done my job. Does that sound pretty good? All right. So we have an amazing panel. I've been told that you all should introduce yourselves. I've never done it that way, but your mics should work. So we'll just do a quick round robin, and you can introduce yourself to say a little bit about your organization, and then maybe one thing that you're looking to get out of this panel.
So good morning, Susanna Mezza here, and I'm currently the Vice President of Community Impact for Wintrust, and that's Wintrust Financial, the holding company. And while Community Impact is really the team that's producing all of the activity and the reporting for corporate social responsibility, for the purposes of this conversation, it's really harnessing the profit and purpose side of our business, really engaging with community organizations, trade associations, social service agencies, and then bringing our entire workforce to get in the middle of that and engage with them in a variety of capacities. So personally, I give of my time to mentor MBA students at Loyola University for their sustainability program. I teach strategic vision at the Lake Forest Graduate School of Management, and I also give of my time on 3 boards to the Illinois Chamber of Commerce, the Chicagoland Chamber of Commerce, and HACIA. So pleasure to be with you. Thank you.
Awesome.
Thank you, Susanna. Good morning, everyone. My name is Bob Esquivel, or Esquivel. I come from a family of immigrants, and my dad is actually, he was from Mexico, and my mom, although she was born here, my grandfather, her dad, was from Mexico also. And to me, it's very interesting to mention that is because he started one of the first Mexican restaurants on the south side of Chicago. He used to have some, if people recognize who the Hispanic, as far as actors are, Cantinflas used to go frequent his restaurant on a regular basis. Again, Bob Esquivel, I work for the United States Small Business Administration. I am the supervisory lender relations specialist, so I work with the lenders specifically to make sure that they understand our programs, feel comfortable using our programs, and to recruit additional lenders. I'm proud to say that we have over 84% of our lenders here, headquarters in Illinois, are part of our participants of our SBA loan programs. The SBA, what is the SBA? The SBA is a small federal agency that was started back in 1953 for the sole purpose of helping out small businesses. In fact, our administrator is a cabinet member of the President's Cabinet, and it's the only federal agency that strictly basically championing the focus on small businesses. So it's a great, as far as position they have, and making sure that the small businesses are very, very well represented. What we do at the agency is we try to help out small businesses get started, stay in business, and to grow. So those are the 3 main factors that we're trying to help out small businesses. Now that's a mission that sounds simple, so we focus in 3 areas to help out small business accomplish that. One is as far as through our counseling services. The other is through as far as government contracting. And the third is capital access, which is what we're all here for. I heard a few people saying they're looking for more money. And so that's definitely something that we want to make sure that small businesses have access to capital. Now, getting back to what our 3 focuses, counseling. We do as far as one-on-one counseling with small businesses through our resource partners. Our resource partners come in the form of small business development centers. They also come as far as with our SCORE chapters, and also our women's business development centers, and through our VBACs for veterans. So we offer this technical assistance because we feel it's very important. With this coupled, the technical assistance or counseling, with the small businesses who are looking for capital access, they are very more successful in getting the capital access, and not only that, but also repaying the loan. This is the assistance that's needed to help out small businesses. Most important, though, too, for our minority-owned small businesses, women-owned small businesses, and our veteran-owned small businesses, and even our rural-owned small businesses. It's very important that they receive this technical assistance. And the other thing is, as far as government contracting, is we try to help small businesses navigate the red tape of being able to bid for contracts. And why is this very important? Because if you realize the United States government is basically the world's largest buyer of goods and services in the world. They actually award over $500 billion worth of contracts each year. So that's a lot of money out there. And we want to make sure that our small businesses have basically a piece of that pie. So it's an important program that we have in helping you, again, navigate through as far as the process for bidding for government contracts. And the last one is the Capital Access Loan Program, which I'm part of. What we offer is basically guarantees to lenders. So it's not a direct loan program to small business owners. What we do is we guarantee the loans through our partners. And I'm proud to say that we have some excellent partners up here on stage with us that participate in our loan programs, through as far as our 7A program, our 504 loan program, and our microloan program. Those are our three main flagships of programs. What happens with the guarantee? Well, the guarantee adds flexibility to the lender's policy, usually in the areas as far as longer terms, startup businesses, and also for startup businesses, longer terms, and for those who lack collateral. Those are the areas, because of the guarantee, it reduces the risk to the lenders and opens up the doors for small businesses. I'm going to stop there now so we can continue on and allow our other panelists to also introduce themselves. Thank you.
Thank you.
Thanks, Bob. Good morning, everyone. I am Pam Randall. Work at JP Morgan Chase. I am a vice president of the Minority Entrepreneur Initiative, which is part of JP Morgan Chase's $30 billion commitment from a racial equity perspective, really focused on ensuring that businesses, particularly, and individuals have the same level of access to resources as others from a community perspective. Our focus here, specifically with small businesses, is to really be able to provide them with insight in terms of either access to capital, access to information and resources, and also opportunities to ultimately help them grow to size and scope, so you get to hire more folks in the community to really create a sustainable system. And we recognize that this cannot be done alone. And so super excited to be a part of our panel discussion where, we'll be able to continue to kind of share insight and resources, because oftentimes small businesses, you just don't know what you don't know, right? And so having forums like this really provide with additional detail and insight, and then the whole networking piece, that with the ultimate goal to help you guys create a sustainable business model so that you can continue to grow. So excited to be here.
Awesome.
Well, good morning, everyone. You're here to talk about money. Good morning, everyone. My name is Brad McConnell. I'm the CEO of Allies for Community Business. We are a nonprofit whose mission is to provide the capital, the coaching, and the connections that entrepreneurs need to grow great businesses, create jobs and wealth in our communities. We're based on the west side, 8 minutes from here, Corner Lake and Kedzie in Garfield Park. And we're based at the Hatchery, which is the largest nonprofit food and beverage incubator in the country. It's right here, right down the street. Come see us. We're both a co-owner of that and the co-tenant there. We serve businesses in all industries, though, and have a very specific focus on helping contractors to build your businesses. And the way we do that, again, is through our three services. The capital we provide is formerly the loans or grants. When we're talking about loans, the loans are between $500 and $100,000. It's that space that banks are less likely to be able to serve, just given their structures and how they're regulated. We're a nonprofit. We're not regulated like that, so we get to do different things in a little more creative manner. We'll talk about that more in just a minute. But we pair that lending, whether it's a term loan or a line of credit, with free coaching, one-on-one. We'll spend as much time with you as you'd like in order to help you to build your business in whatever way you're seeking to do so. So we listen first and then help you walk that path and spend as much time as you think is valuable. And then on top of that capital and coaching, we know that entrepreneurs need connections to all sorts of other stuff that our group of 32 people don't provide directly. And so we know a lot of folks, everybody up here, over there, and all around the city in order to help entrepreneurs just get into whatever it is they're trying to do. And so our coaches are really intent on doing that as well. So before to your question about what's the one thing I want to make sure we accomplish here, I want to make sure that everybody, when you walk out of here, you know exactly what you need to do in order to qualify for a loan from us. Not kinda, not sorta, not maybe, exactly. Because our credit policy, every single word of it, is on our website, and I can tell you about it in really short fashion here. And so we're going to be doing that as we speak, so that you know precisely what it is that you need to do next in order to be ready for capital from at least one, and you'll learn from there what the difference are between sort of the way that we do it and all other lenders do too, which will be a broader focus of this part of the discussion. But that is a tangible takeaway that I hope you all have.
Thank you so much. So, like I said, one of my big goals is that when you walk into a lending institution, that you go from getting a no to a yes. So, quick kind of poll. How many people in here have applied for a loan and ever been told no? Okay, quite a few people. So I think one of the reasons why you were told no, and I know this from my own experience, is because you might be amazing at making your product amazing at providing your service. But most of us are not bankers. Most of us don't have the background in finance, and for most small businesses, don't have someone on their team that has that background either. So there tends to be a knowledge gap that most small business owners have that they have to really overcome to be able to come and sit down in front of one of these financial institutions that we have in front of us today to be able to get a yes. So I would love to hear, and there's no particular order, however, whoever wants to go first, I would love to hear from you all, maybe what are some of the top 2 things that small business owners need to overcome for you to turn a no into a yes?
Great question, LaForest. I would say, first is truly understanding your business, and we've heard that in different contexts from our discussions today. But ultimately, what can happen is the business will come in and they'll have a great opportunity from their perspective. They'll talk specifically about the making of the transaction, what they actually do, and what that will allow them to do, but it's not necessarily translated into tangible forms that a banker then can take a look at and say, okay, here's exactly what we need in order to have a next step. And so what can help with that is having a business plan that you actually can leverage and understand the ins and outs of it, right? The more you can articulate to the lender what it is that you're looking for, what will it allow your business to do, how you're going to be able to pay the funds back, what potential collateral do you have to support it, that will then help engage the conversation further. I can actually say that in addition to what we've mentioned is the importance of having a well-rounded, trusted advisor team. So knowing who your accountant or CPA is, they can actually talk to the numbers in more detail. Having a great relationship with your banker, of course. Oftentimes people will think that they have a relationship with the banker, but they usually come in, for example, for teller services, and that is separate and aside from having a relationship with a lender. So leveraging your network and resources in order to create a holistic approach to this oftentimes either improves the odds of turning a no into a yes, or if it is still a no, you will then know exactly what you need to do in order to change the opportunity to a yes.
Awesome, thank you.
I'd like to say, first of all, I agree with everything that Pam said. Of course, Pam's been around as long as I have, maybe a little less, but here's the other thing I want to add to this. I mentioned to you as far as we have our resource partners. We have SCORE, we have Small Business Development Centers, we have as far as Women Business Development Center, and also we have VBOX. Those are very important. And the reason why, as far as you're getting the no's, is probably not well prepared to talk to a lender yet. And as far as using those services, by the way, using one of our resource partners, they offer free one-on-one counseling. And that, again, I should have emphasized that word, free. So you can talk to them as much as you want. Connect to a counselor, or as far as if you don't like that one, you can connect to another counselor. You can use one of the other programs, either with SCORE or interact with as far as an SBDC, but very important. So what's going to happen? In fact, I heard somebody use the word as far as our keynote speaker mentioned as far as baby. Your business is your baby, right? So you have something that you're growing as an idea, and that's your baby. So when you go to knock on the door of a lender, and the lender tells you no, but he doesn't want to tell you that you have an ugly baby, right? So you have to take heed to what he's telling you. But the best place to go is back to the counseling services. They will be more objective. They will be more transparent. They will tell you, here's the problem. Maybe you can pretty up that baby with a bonnet, meaning more working capital, or a little bit more as far as experience. Whatever it needs in order to pretty up that baby to get to the point where you're not getting no's. Find out also from the lender why they said no. Now, if they're an SBA lender and they tell you because it's collateral, that's probably the number one reason why SBA lenders use our program, is because of deficiency in collateral. So they're not, again, being honest with you. But hopefully you get an honest lender who will tell you your problems so you can go back and work on them. and probably go back to that same lender and say, here's the areas that you call deficiencies, and we have something to overcome those deficiencies. Do not just go back and forth with the lender and hoping that they will change their mind. Listen to what the problems are and see if you can overcome those deficiencies.
You all heard the line, you need to have money in order to borrow money? Mm-hmm. So when you're talking about real money, and just for the purpose of this conversation, I'll say north of $100,000 that you're trying to borrow, that line's true. And the reason is that if you're a bank and you put that kind of money out to somebody and it doesn't come back, you're not going to be a bank much longer. So you need to be very, very careful at doing loans of that size to an entrepreneur. And therefore, you as an entrepreneur need to build up your business first in order to have enough assets, enough wealth, in order to then substantiate to that lender that you're going to be able to pay him back. And you've got evidence for that, not a promise for that. So the question is, okay, fair enough, but how do I get to that point? Like, the whole point of trying to get access to capital is to get loans before I have the wealth. It's supposed to help me to build the wealth in the first place. In that situation, that's where you work with people like us. Whereas a nonprofit, we get to think differently. We just get to be more creative because, again, we don't have the same regulations, we don't have the same financials, we don't have the same rules that traditional financial institutions need to follow, for good reason, by the way. And so that's why we're good partners with all the different institutions you see up here, because we do something that's different and earlier than a traditional financial institution will do that's larger and later. So let's get real precise then. What is it exactly that from an institution like us, to be precise, exactly us, are looking for in order to make a loan to you? So we're looking for somebody who has good habits, not wealth. Those are different. They're related, but they're different. And so the way that we evaluate you as an entrepreneur is that if you're looking for a loan up to $25,000, we look at three things only, and they all come off your credit report. You have to write this down, by the way, because it's all on a4cb.org. One more time, a4cb.org. Just go to that. It's easier to take notes. The three things are, one, in the last 24 months, have you avoided bankruptcies and charge-offs of greater than $500? Two, over the last 12 months, have you had at least one open line of credit you successfully repaid for all those 12 months? And three, today, do you have at least 25% capacity on your outstanding lines of credit, so you're not just borrowing from us to go pay somebody else, because that doesn't help you build your business. Those are the only three things we're looking for. If the answer to all of those three things are yes, we just move to make you an offer, and we do all that electronically while you're sitting there on the screen. And we'll do it all in about 15, 20 minutes. I can, but it's easier to just go to a4cb.org and
I knew you was
lay
gonna
it
say
out
that.
right there, you know? It's much easier that way. If you're looking for more, though, first of all, if any of the answer to that is no, that's fine. We're going to still work with you in a more detailed way, just not as quick. If you're looking for more, though, 25 grand to 100,000, then we're going to do all that, but then also look at tax returns and bank statements in order to do two calculations: debt to income, debt service coverage. And so, again, I won't belabor exactly how that works. We lay out every single word about how those calculations work so you can read it for yourself and think through how that works for you. But those are the things that matter. And if you've got problems along those lines, along those things, either in your own credit history or in the financials of your business or your personal, then that's going to make it very, very hard to borrow from even a super creative, like nonprofit lender like us, let alone a highly regulated financial institution like your traditional bank. So that's the context. We talk more about like what that means in practice, but that's the context.
Thank you. Anyone else want to answer? Or?
Well, it's clear that I can't answer to the banker side, but I do have an intersection that ties nicely into this, is the fact that we're taking intentional steps to then fund organizations like Brad's, right, to partner and be at the table so that when customers like yourselves aren't ready for the banking side, that there's tangible and continuous and reputable programming that they offer and coaching so that when you are ready for primetime banking, that the conversation's a lot easier. So from the seat that I sit in, I lost count at 85, but I've sat across a table from over 85 CEOs and executive directors at nonprofits, trade associations that are providing that programming and that coaching for then the B2B side to be ready. So Brad's numbers are better. This is not a competition. We do have easy access loans from $5,000 to $250,000, but for the sake of this conversation, there's a lot of strength when corporations are intentional about who they're going to partner with, give them money for that. But then what I want to stress is not just give them money for it, is that we go through an annual exercise of collecting impact metrics so that there's a 10-point system of saying, what did you do with our money? How many clients did you serve? How many hours did you spend with those clients? How many jobs retained? How much of the products or diversification of services and products did the end user accomplish? So we're asking all those things so that we can go back, and it's a cycle of community impact. So that's what we do. So I wanted to stress that intersection. There's not a tangible, this is what you need to bring to the table for a loan application, but the intersection of community impact with partners like these up here.
Because if we're doing it right, we provide you with a $25,000 loan, then we provide you have to repay that with a $75,000 loan, and now you're ready for a $150,000 loan. We walk you over and introduce you to one of the bankers who are then ready to say yes to you because you've done the work incrementally to build up your financial history and also your financial balance sheet so that you're ready to get those larger loans at that time.
Yeah, then it's really true economic empowerment, and that's what we want to report on, and we want to see you succeed on too.
Awesome, thank you so much. I'm gonna ask you one more question. I'm gonna open it up to the audience for questions for a few minutes. But before doing that, I just want to throw out a scenario. Real quick in the room, how many folks are looking for financing for real estate or construction related projects? Okay, great. Which makes sense. You're in the right place at the annual construction summit, right? So the reason why I asked that is because I just went through myself a construction project. I did a major gut rehab in the Woodlawn area where the Obama Center is going to be opening in 2025. It was not cheap. I had to work with a financial institution, none of which are on the stage today, but I had to work with a financial institution. And one of the things that I had to learn was, kind of to Brad's point, you need money to make money. So I had to come with 20% down. That was very, very shocking to me because I thought, I have good credit. I ran a business prior to doing this. I didn't think I was going to need to come with so much money down. But for most commercial transactions, that's what you're looking for, right? I mean, it's the 20% down. There's some exceptions. They have some different programs and things like that. But I just want to share that with you because if you're embarking upon, a real estate related project, that is something that you might run into. So I think for the question that I have for the panel, I know you talked a little bit about, folks have thrown out terms like collateral, money that you need down. What do you need, let's say, to get, for simple numbers, maybe a $100,000 loan and $1 million loan, if you offer up to that? What do you need to put down to do that? And what experience do you need to bring to the table?
So if I can, I'll start off first. The SBA has an array of different loan programs. And we start from as far as real small loans, or our microloan program that we partner up with Allies for community business. And they start, you can do a loan as small as $500 and up to $50,000 under the microloan program, although Allies offers other programs though too. And the thing I want to focus on is the different collateral and different, as far as down payments are going to be required depending on your situation. We also have, as far as a regular 7A loan program, and it goes up to $5 million. So you can start though with $150,000 smaller loans. There's no real minimum with the 7A loan program. But the important thing is you can use that program for working capital needs, for equipment needs, and also for just for permanent working capital needs though too, and including real estate, either for brand new purchase of a real estate, construction, or expansion. Now, that's our 7A loan program. Typically, what is needed is usually 20%. It really depends on the risk of the business. of how much capital injection is needed. If you're an existing business, if you have sufficient amount of equity already in your, as far as in your net worth position, you might be able to do almost 100% financing, with the exception of commercial real estate. And then also, if you were looking at one of our special loan programs called the 504 loan program, and this is what I really want to lead up to because I think it's probably the best program out there for commercial real estate. The 504 program requires a simple structure actually of 3 parts. One is going to be with a third-party lender, which can be like Wintrust or with Chase Bank or any of your bank of your choosing. And the second part is with the certified development company. CDCs, 504 CDCs, are not-for-profit intermediaries that are approved by the SBA and licensed to do 504 loans. And they do this by selling that guarantee that we offer them, which is 100% guarantee, to investors to get the ventures, to finance the programs for you. So that's, again, 50% is third party, 40% is going to be from a CDC, and 10%, only 10% from the small business owner. So it's less than that 20%. What's really nice with the 40% part, it's fixed for either 20 or 25 years. That fixed portion is right now around 6% interest rate. So it's really unheard of as far as these interest rates, they're rising, but at 6% for commercial real estate and only having to put down 10% in most cases. That is a program that I think is the best out there for small businesses who are looking to do as far as some sort of real estate financing, either brand new construction or buying an existing structure, or they have a structure they want to expand on.
Thank you.
That split you mentioned, LaForce, makes a big difference, right? So if you're applying for $50,000 versus applying for $500,000, $100,000 versus $1 million, like those are 2 entirely different processes. You're going to need totally different things. So if you're borrowing from us up to $100,000, you'll notice when I was listing off those things that are required before, I didn't say anything about your credit score, because we don't look at it, we don't care. I didn't say anything about the value of your personal wealth, your collateral, because we don't take collateral and we don't care how rich you are, or how nice your house is, or how nice your car is. None of that matters for these smaller loans. We're looking for good habits and good businesses. But you're talking about a larger loan now. You're going to, especially if you're doing something that's very specific to a commercial real estate development, not contracting, but developing, you know the difference, then in that case, there are going to be far greater requirements that you're going to have to meet, inclusive of collateral, down payments, and all the rest. So that distinction really matters about how much and why. Specifically for what we typically work with contractors to do, generally people come to us and say, I got this guy who's making me do like net 90 payments, so I got to float the whole thing. Well, that's tough as a small business owner, where you got to figure out how to have all the money up front to pay your people, pay all of your supplies, do all the work, and then eventually somebody comes back and pays you. Well, that's what lines of credit are for. And so we offer lines of credit specifically for contractors in order to help solve for that problem, so that you can just like get your own liquidity going and you don't have to be so stressed out about the fact that this guy's paying you so slowly, if at all. I know you guys know that story. The line of credit essentially gives you a little breathing room, right? And you just pay only what you need, and then immediately you get paid, you pay that back, and therefore there's no more principal or interest to pay. And you just sort of draw on it as you need to. So again, very, very different than getting $1 million loan for a commercial real estate project. That's an entirely different thing altogether.
Yeah, I would just echo both Brad and Bob's comments in terms of the importance of, you know, the partnership and recognizing that depending upon the actual size of the loan, the credit request, the experiences associated with the borrower, their management team, you know, how the project is going. Is this something that they've never had experience in? Is this something that they have and it's, you know, an additional acquisition? So all of those variables, you know, definitely come into play, particularly as the nature of the deal changes, along with the dollar amount of the transaction. So, you know, that's why our partnership with the SBA is extremely important, because it can, as Bob has already mentioned, you know, give the lender a little more comfort level from a risk mitigation perspective, and then also from Brad's perspective, recognizing if the actual loan amount is typically lower, if it is, as he mentioned, a line of credit that the business is really looking for in order to fund gaps. And so it really is going to require a more detailed discussion.
Awesome. And I know we're running low on time, so I just want to quickly open it up for a question or two. Any questions? I think he has a question in the front, or she has a question.
Hi. What is your name? I'm sorry.
Brad.
Brad. Okay. So, with the loan from the not-for-profit organization, you're
Allies for Community Business.
Thank you. Are you like, for me? I'm just starting out. So I'm trying to figure out whether I'm going to sole proprietorship, LLC. Can a person be a sole proprietor at this stage and apply for a loan with your organization?
Yes, we don't care what your legal structure is so long as you have one.
Okay.
And our free coaching will help you to think through carefully, like, what is the optimal structure for you for the future?
Okay.
But that's not a prohibiting factor for getting a loan today.
Okay. Thank you.
Hi, my name is Jason Qualia. I'm with Risk Management Solutions. We work with a lot of independent contractors, MBE, DBE certified. And one of the big hurdles we see aside from the bonding process is the fact that in order to be able to bid, you have to show proof of insurance and things of that nature. So are there opportunities for contractors and GCs to be able to get some type of soft cost financing or some type of grant to, for them to be able to get into the bidding process?
Sure. So the big hurdle is the bonding, right? So as I mentioned, we have a 7(a) loan guarantee loan program. We also have a guarantee loan program for our surety bonding. So there is a program for surety bonding where we guarantee to the agents, the insurance agents, that if they basically bond the small businesses that they're usually a little scared of doing, to do so for startups or even as far as existing businesses, to be able to get that bonding, which is very important when you're bidding for contracts. So we do have that program. We have it on our website at all the details. We have the listing of all the agents that participate in the program too. It is a guaranteed program that, again, that is guaranteed by the SBA and makes it a little bit, as far as lowers the risk for those insurance companies, as far as that they can offer you the surety bonding that we're talking about for different types of projects too. There are different levels of it.
We got time for maybe one or two more questions. Does anyone want to?
Yes.
My name is Brian Bridges. I own Bond Construction. And so my question is, I wanted to know you all's names and agencies that you all represent, because I don't see them in here. I don't know if I'm looking in the wrong place, but I just would like to know the names and maybe the website so I can access this information that you're talking about.
Sure. Again, my name is Bob Esquivel, and it's spelled E-S like in Sam, Q-U-I-V like in Victor, E-L. And I'm with the United States Small Business Administration, SBA. SBA, most of you probably know us all for as far as the last 2 years through COVID EIDL thing, for EIDL loan programs, are also the RRF programs, the PPP loan programs. So yeah, we're the same agency, but we've been doing this since 1953, before the COVID, helping out small businesses. A couple of things I failed to mention, as far as the 504 loan program. When you use that program with that structure I mentioned, you can go up to $13 million or up as far as projects. So it's a very large loan program. The other thing I failed to mention, and thank you, Brad, for bringing this up to me, as far as that's one type of program that we have for as far as construction, but also for contractors. We do have a line of credit program. It's called the contracting line of credit program under our cap line program. And under that cap line program, that goes up to $5 million. It's different from your traditional type of line of credit. It's specifically to finance contracts. So we look at as far as the basically the forecasted cost of the project as opposed to looking as far as what you actually have now. So it's a different program. If you're interested in, again, the way to apply for our loan programs is through lenders first.
Can I find you on LinkedIn, and what's your name so that way we can?
Brian Bridges.
Bridges. Okay.
So
'Cause I'm
I-
going to find you.
I just to add, sir, you're not mistaken. You are looking in the right program book. If on the back of your program book, there is a website. It is chicago.gov/2023 Construction Summit. If you visit that website, you'll see the entire run of show. It'll have all the panelists' names, organizations, and titles on it, okay? So just, if you haven't gotten a program book yet, make sure you get one on the way out the door, because that website will include all the information on the panelists, and we'll also be sending some post-event follow-up emails and things in our DPS alerts, our normal communications that some of you may all be used to already.
And I'll do it old school. I got cards.
Mention that we do have an SBA table out there too.
Okay.
Lake and Kedzie, right at the corner at the hatchery. Yeah. Come see us.
All right. All right, so I think that concludes this morning's panel. Thank you so much. I hope that you got the information to turn a no into a yes in terms of getting the money that you need to grow your business. If you have any questions for us, like you said, look on the back of the program. You can get all of our information. If you're on social media, I'm at LaForce Baker. That's LaForceBaker on all social media channels. You can also check out our website, worldbusinesschicago.com. Thank you so much again.